Welcome to The Explainer. So glad you're joining us today. Let's get right into it, all right? We are unpacking the absolutely intense market dynamics and macro drivers hitting the China polymer sector for the first week of August 2026. If you've been tracking the markets this week, you already know things are moving fast, like blink and you miss it fast. This explainer is going to break down exactly what's going on, why it's happening, and crucially, how these massive trends are completely reshaping pricing and supply chains right this second. We've got a ton of ground to cover, and we'll be using fresh data directly from Polymer Bazaar to map the whole thing out for you.
But hey, before we dive into the heavy analysis, we gotta talk about where this intelligence is actually coming from. Look, in a market that literally shifts by the minute, waiting around for a daily email is, well, it's basically a liability at this point. So today we're leveraging Polymer Bazaar's AI-powered chatbot. This tool delivers instant, deeply detailed China Bazaar reports straight to your phone. We're talking actionable market intel in 5 seconds flat. That kind of speed, it's absolutely a game changer when you're fighting to secure margins in a week as wild as this one. We'll get into exactly how you can use this at the end of the explainer, but just keep that technological edge in the back of your mind as we go through the numbers.
Okay, let's set the stage. The August 2026 market is, quite frankly, a high-stakes volatility battle. We are not just looking at a standard supply and demand equation this week. No way. The entire landscape is being aggressively pushed and pulled by these massive macro themes. We're talking sweeping geopolitical shifts colliding right into sharply fluctuating oil prices. It's creating this incredibly turbulent environment where cost supports are just constantly being tested against harsh downstream realities. Honestly, everything we're looking at today, from your everyday commodity plastics right through to specialized engineering polymers, it's all reacting to this exact high-pressure cooker of an environment.
All right, let's kick things off with Section 1, Commodity Polymers, and how we're navigating the supply glut.
Starting right out of the gate with polypropylene, or PP. Volatile and range-bound is basically the perfect way to sum up the paradox we're seeing here. See, we've got this super firm price floor, and that's being propped up by geopolitical sentiment and raw material costs. The market is just refusing to let prices drop below a certain point. But here's the catch. Any upward momentum, instantly suffocated. Why? Because we're staring down high supply mixed with off-season demand. So the big takeaway here is that we're squeezed into this really tight, volatile little corridor. There is practically zero room for price concessions right now. Buyers and sellers are literally just bouncing between the ceiling and the floor of this range-bound market.
Moving over to the polyethylene or PE market, and wow, we are watching an absolute tug of war right now. On the bullish side of things, oil-based PE is showing some serious strength. It's being kept afloat by essential downstream activities. Specifically, we're seeing packaging film restocking and really solid demand for food-grade materials. So that's keeping prices buoyant. But pushing back with intense bearish pressure is this massive surge of new supply, just flooding the market. The restarts over at Rongsheng and Sinopec Korea, they are pumping a ton of volume back into the system. So it's a textbook bull versus bear showdown, and it's honestly fascinating to watch these two heavyweights keep the PE market completely suspended in tension.
Let's round out the commodity sector by looking at EVA and PVC side by side. EVA right now is locked in a total stalemate. We've got rising raw material costs acting as a really strong pillar of support, but here's the thing, both supply and demand have just dug their heels in, nobody's budging. So what does that mean for us? We can pretty much expect stable but persistent fluctuations ahead for EVA. Now flip over to PVC. PVC futures actually bounced around a bit after opening lower, but the spot market, it's just sitting there in tight consolidation. Why? Because buyers are being incredibly cautious. They are strictly buying for immediate needs only. Nobody wants to risk building up inventory right now, and that's keeping PVC spot prices remarkably flat, even with the futures moving around.
Okay, moving on to Section 2, styrenics and polyesters, and taking a look at the crude oil impact.
So, if commodity polymers were a tug of war, what we're seeing here is a much clearer and unfortunately much more bearish trajectory. We are tracking a noticeable market softening across the board here, and honestly, it all traces straight back to international crude. Let's look at ABS first. We've seen these sharp drops in international crude oil which have just dragged styrene futures down with them. When you take those weakening costs and pair them with the off-season demand we're seeing over in Uyao, Plastic City, well, market sentiment for ABS is naturally going to soften up. Then you've got PS, or polystyrene. This situation is being heavily driven by US-Iran tensions and again, those falling styrene futures. Offers are dropping, and this market is projected to just stay weak and range-bound for the time being.
And finally, PET. We actually saw an easing in some geopolitical tensions recently, which caused crude oil prices to totally collapse. And that collapse essentially yanked the cost support out from under the entire PET chain. Add in some already sluggish demand, and PET is facing some very clear, undeniable downward pressure today.
Right, let's shift gears to Section 3, engineering plastics. We're seeing some really mixed signals and a market stalemate here.
You know, the PC market right now is basically the definition of an immovable object meeting an unstoppable force. It is completely stuck in a stalemate. On one hand, you've got high crude support really trying to lift the market up, but on the other, incredibly weak downstream demand just dragging it right back down. The result? A totally frozen landscape. And honestly, it's pretty much the same story of dead quiet for POM. The POM market is basically asleep right now. Enterprises are completely laser-focused on just digesting the inventory they already have. And until that backlog finally clears out, we are just not going to see much action or any real directional shifting there. Now, digging into the nuances across the rest of the engineering plastics is super critical. PA66, surprisingly, is actually benefiting from these high raw material costs, and it's holding its ground nicely. But PA6, totally different story. It's trapped by all these mixed signals. You've got volatile crude prices swinging one way and really cautious buyer replenishment swinging the other. Because of this mess, both PA66 and PA6 are expected to just stay range-bound. pmma, on the other hand, is finally showing us a little bit of green. It's managing some slight price gains, but that is strictly because strong upstream raw material costs are shoving it higher. And wrapping this group up, PBT remains stubbornly stagnant. It is firmly caught in the grip of the industry off-season, and it doesn't look like it's going anywhere fast.
Which brings us to Section 4, your competitive advantage, focusing on instant intelligence. So, as we've clearly seen across all these sectors today, the market is incredibly turbulent right now. Relying on yesterday's news to make tomorrow's buying decisions, it's just not going to cut it anymore. Getting your hands on this exact, deeply detailed China Bazaar intelligence report instantly is actually super easy. It's a totally frictionless three-step process. First, just save the number you see here on the screen, +91 93 746 24365. Second, open up WhatsApp and text the word China. And third, literally within 5 seconds, you'll get the complete, real-time market report sent right back to you. I mean, it really is that simple to stay ahead of these wild shifting price floors and sudden supply surges we've been talking about.
Which leaves us with the ultimate question to wrap up on today. How are you navigating this week's volatility? Are you still relying on lagging indicators, or are you actually tapping into real-time data to make your moves? Look, whether you're trying to time the bottom of the pet market or you're just waiting for that PC stalemate to finally break, you absolutely need the right tools in your corner. I highly encourage you to use that number on the screen, grab your instant report, and subscribe to Polymer Bazaar for those daily updates. Thanks so much for joining me for this explainer. Keep a close eye on that data, stay agile out there, and I will see you next time as we continue to decode the markets. Take care.